carrying amount. Carrying amount, you know the base value. You have the concept of temporary difference. Is it right? That's all. Now we will consolidate on those lines as such. Okay. Now I gave you enough space to do the workings also. Okay. What it says, what we have to make sure today is what? Today is 30 of October. Is it right? Yeah. What we have learned something, just a reminder. Okay. We have learned about the temporary difference, and we have learned in something with respect to what? We have learned something with respect to deferred tax. Is it right? These are the two most important things which we have to understand. Okay. Now what it says is, on January 1st 2008, Simon decided to revalue its land and buildings. Is it right? They want for the first time. A qualified property valuer reported that the market value of the land is how much? The market value is how much? The market value is 80,000. Fine. The land was original purchase. The book value was how much? The purchase value is how much? The purchase value is 65,000. Fine. Okay. That's all. Just put one line there. Okay. The required provision for income tax for the year ended 31st December is how much? What is the 31/12/2008 is how much? 19,400. The difference between the carrying amount of net assets and the tax base. Is it right? Tax base. The difference between the carrying amounts of the net assets of Simon, including revaluation of the land above, and the tax base is how much? Difference is how much? Difference is it is nothing but a temporary difference. Is it right? How much is there? 27,000. Now what they are saying, they are saying that deferred tax. Is it right? They are talking in terms of deferred tax. Deferred tax is how much? 27,000. Is it right? Opening balance. Is it? Deferred tax is how much? Opening balance is how much? 27,000. Okay. Sorry, sir. The opening balance is how much? The opening balance of the deferred tax account is how much? 2,600. Is it right? And the rate of tax is how much? Rate of tax is how much? Rate of tax is 25%. They are asking us to do what? They are asking us to do the extracts also. Is it? They are asking us to do the extract also. First, what we have to do? First, we have to act. Already 2,600, there is a balance. Is it right? Already there is an opening balance of how much? 2,600. Now we have to know what is whether the tax has been increased or not. Is it right? Whether the tax has been increased or not. First, what we have to do? We have to write note 1. Is it right? Note 1. In note 1, how much is the difference? They have made it a point. Is it right? How much is the difference? The difference of carrying amount. Is it right? The difference of the carrying amount. See what they have mentioned. They gave you the market value, they gave you the book value, they gave the required provision is how much? The required provision for income tax is 19,400. Fine. Now they have given the difference in the book value and market value. Is it right? This is what the difference. On this difference, you have to calculate the deferred tax. Is it right? You have to calculate the deferred tax. Already they have calculated there is an opening balance. Is it? Already there is opening balance of how much? 2,600. This opening balance is there. Whatever the difference we are getting from this, it is nothing but that is the additional or increased tax we have to calculate. Is it right? What we have to do? we have to calculate. First one is increase in deferred tax. Is it right? Increase in deferred tax. Now, what is the difference? They have the difference between carry. Is it right? Tax on difference. Is it right? Tax on difference. Is it right? Difference between difference. Is it carrying amount minus tax base. Is it right? Now what is the amount? 27,000. What is the rate of tax they have mentioned here? They have mentioned the rate of tax is how much? They have mentioned the rate of tax is how much? 25%. 0.25. Is it? 0. First we should know how much we have to pay tax. That's very important. Is it right? How much we have? Means how much is there? 27,000 into 0.25. It comes to how much? 6,750. Okay. Is it how much it comes? It comes to 6,750. From this 6,750 minus, is it minus, what you have to do? You have to remove the opening balance. How much is the opening balance? Opening balance is 2,600. Is it? Opening balance is 2,000. Difference is how much? Difference 7 minus 6, 1. Is it right? 6 minus 2, 4. This is increase in deferred tax. Fine. This is the note. See, when you are following the notes, follow the notes with respect to somewhere. Maybe I have written step 1, step 2, step 3, step 4, or I have written note 1, note 2, note 3, note 4. Okay, that is in order to make sure that you should not get confused. I follow that procedure as such. Is it right? Next, what you have to do? How much we have? Is it how much is there? 3,000, 6,750, 4,150. Is it? Now, how much they have? See, how much is that? The required provision for income tax for the year ended is how much? The required provision for income tax for the year ended is how much? The required provision is 19,400. Is it right? Now, is it 19,000 required provision? Is it right? The required provision for income tax is how much? Estimate. It is nothing but they have made a estimate. Is it? Note 2. Is it? They have made an estimate. Is it? Now we should know actually how much we should take into consideration. Here, note 2, what we have to write? We have to write income tax expense. Is it right? Income tax expense. How much is there? How much they have made year-end estimates? Is it right? Year-end estimates. How much they have made year-end estimates? 19,400. Okay, 19,400. In 19,400, how much we have to consider it? Is it right? How much is related to the income tax as such? Now, increase in deferred tax is how much? Increase in deferred tax is 4,150. Is it right? Increase in deferred tax is how much? 4,150. Now, from this, is it right? We have to, the rule says that we have to remove that, we have to remove the cap. See, tax you pay on your income. Is it right? Tax you will pay on your income. Tax you will not pay on your revaluation. Revaluation you have to show separately. Is it right? Revaluation we have to show it separately. We should not show the revaluation tax in the normal tax. Understand the point? From this, what we have to do is it right? How much is the deferred tax? How much is the deferred tax? Is right? Increase in deferred tax is how much? Increase in deferred tax is 4,150. Okay? Increase in this. Is it right? In this you have to see. Understand my point? Tax you are paying on the normal income. Is it right? Capital gain tax. Fine. I will write like this. Is it right? I will write like this. What happens? Where I will write? I will write. See, there are two types of that. One is you have the capital gain tax. Is it right? The second one is revenue tax. Is it right? Revenue gains tax. Is it? Capital gain tax is on revaluation. Is it? Now, we should not mix both the taxes. Is it right? What we have to take when we are doing this, we have to take only which type of tax? Revenue tax. Is that? We have to take on the income tax. Is that? Revenue tax is nothing but we have to take only on the income tax. Any capital gain tax, we have to show it separately. Okay? We should not show here. Is it right? Now, what will happen? Less tax on revaluation. Is a tax on revaluation. How much is there? What is the value? 80,000. Any doubt is there? Just to stop me. Okay. 65,000 equal to how much? 15,000 times 0.25. 15,000, 7,500, 3,750. Is it right? Check again. 15,000 divided by 2 is 7,500. 7,500 divided by 2 is how much? 3,750. If you take into consideration, is it right? How much is the tax? Tax is how much? This much. It comes to how much? 19,800. This is nothing but income tax expense. Little bit careful. You should know, is it right? Why we are taking, why we are deducting this? Is it right? We are deducting this only because it is a capital gain tax. Is it right? It is a capital gain tax. Because it is a capital gain tax, we are deducting it from the normal income tax. Is it right? Normal income tax. Fine. Now, that's as simple as that. Is that now income tax? That's all. Nothing is there. Is it right? Now we will continue with the income statement and balance. What we have done in note 1? In the note 1, we have calculated the deferred tax. In the note 2, we have calculated the actual income tax as such. Okay. Now, what we have to do? Step 3. Is that step 3? Is that what we have to statement of? Is it right? Statement of profit and loss account. Any doubt is there? You stop me. Okay. It's all your class is all yours. Is it right? Extract. What the rule says, see what the rule says in the previous slide. The difference between the carrying amount of a revalued assets and the tax base is an example of what? Temporary difference, and will give rise to deferred tax. Fine. Which will be taken into where? Which will be taken from how we are going to calculate? We are going to show it in the other comprehensive income. We are not going to show it in the regular income. Is it right? See, this is what the rule says. Is it right? If there is any revaluation of the asset, non-current asset, it will be shown as a temporary difference with a deferred tax, and you have to show in the OCI. We should not show in the profit and loss account. That's what we are doing here. Is it? That's what we are doing here. Is it right? What we are doing? What we'll say that how much is the income tax expense? Income tax expense is how much? Income tax expense. Is it right? Note 2. Is it? Income tax expense note 2 is how much? 9,800. Is it right? Now, that's all. Is that? You have to give some space and write down other comprehensive income. Is it? How much is the other comprehensive? See, you got how much in other comprehensive, that is the revaluation gain. Is it right? How much is the revaluation gain? Revaluation gain is how much? 80,000 minus 65,000. Is it come? How much is there? 15,000 minus how much we are going to pay tax on that? Is it? We are going to pay tax on this. Is it right? Deferred tax. Is it right? 15,000 times 0.25. Is that how much we are paying? 3,750. Is that 3,750? How it will appear? 11,250. The purpose of doing this is we are going to show it as a other comprehensive income. In future also, when we are going to do the complete question, whenever you will come across a revaluation, in the revaluation you have to calculate the difference, and any tax you have to pay tax separately. We should not, because this is income tax and it is that I will write here. This is that, it is what? This is the income tax. Fine. And this is what? This is going to be a capital gain tax. What we are learning is, we are learning that whenever there is a tax, you will have to show separately. Because what happens, why we have to show separately? The reason is, see, the percentage of income tax will be different. The percentage of capital gain tax will be different. Okay? Incidentally, it is 25% here. But in reality, the income tax rate will be different. The capital gain tax rate will be different. Okay? This is what it says. Now, what is the step? What is the step 4? Is it? What is the step 4? Step 4 is nothing but statement of financial position. Again, you have to put we are only doing the extract, only showing the things what are relevant. Okay. Now, in that what we have said, non-current assets. Is it right? Non-current assets. How much is the non-current assets? What they have revalued? They have revalued land. Is it right? They have revalued land as such. Is it? Non-current asset. Okay? Non-current asset. In non-current asset, what is the value of the land? The value of the land is 80,000. Is it right? Revaluation. Fine. Revaluation is how much? 80,000. Fine. Now,
Cost of the land 65,000 or 80,000.
Pardon?
Cost of the land
Yeah.
will be 65,000 or 80,000.
80,000.
Okay.
Is it right? See what we have done? Is it right? See, actually, yeah, fine. It is 80,000 because how much is the, see, yes, 80,000. What we will do? We have that profit it is there. It is right. We have the profit. How much is the, how much gain you are getting? 11,250. Is it right? After paying the tax, how much you are going to have? 11,250. Is it? After paying the tax, how much you will have? 11,250. Is it right? We will show it in where? We will show it in the equity. Okay, we will show it in the equity as such. Is that 11,250? Fine. Now 1 minute. Okay, now that's land is at 80,000. now you have, what is there? You have the deferred tax. Is it right? Non-current liability. Non-current liability is nothing but deferred tax. Is it right? See how much is the deferred tax we have calculated. We have calculated deferred tax is how much? 6,750. Fine. We have calculated how much? 6,750. And what is the income tax estimate? Income tax estimate is payable. Is that? Income tax estimate payable is how much? It is 19,400. Is it right? See now. See when you do the things, deferred tax. We have here. We should not take the increase in deferred tax. Which one we have to take? We have to take it in the. This is nothing but non-current liability. Is it right? Non-current liability. And this is nothing but current liability. Is it? This is nothing but current liability. Fine. Yes. Now we have to take the gross amount. Okay, we have to take whatever. See, in the current liability we will show only the provision. Is it that payable? Is that? If you take deferred tax, where we have written, it is note 1. Is it right? If it is note 1, what we have to mention? We have to mention note 1. Is it right? It comes to how much? 6,750. Fine. Now what we have to in the current liabilities, we have to show it as tax payable. Is it tax payable? This is nothing but estimate. Is it right? It is note 2. Is it right? It is note 2. How much is there? 19,400. Is it right? Whereas in the equity, got my point? In the equity, is it right? In the equity balance, what happens? You have a revaluation gain. Is it right? Revaluation gain or revaluation surplus. Is it right? How much is the revaluation surplus? Is it right? Is it that OCI? Is it right? OCI. It is from where? Step 3. Is it right? OCI. Is it right? How much is there? 11,250. Now you understand? You asked me why we have to show, why we should not show 65,000. Is it right? If you say 65,000, plus 15,000. I'm just writing for your understanding. Is that 65,000? I will remove this after some time. Okay, 15,000 minus 3,750. Is it right? Is that how much you have to show? You have to show it as 65, 80,000. How much you will get? You will get somewhere 76,250. Is that 76,000? But we are not doing like. We have to show the value of the land in the assets, and we have to show separately how much we have gained on the revaluation. Is it? Now, and now how we have to, where we have to show is that we have state balance sheet is there. We have to show in the statement of changes in equity also. Is it right? We have to show in the statement of changes in equity also. What we will do actually, this is step 5. Okay, is it statement of changes in equity. Is it very simple? It's not, nothing is there. Is it right? How much is the revaluation gain? Revaluation gain is how much? Revaluation gain is 50. I will write here again. 80 minus 65. It comes to 15,000. Is it right? Less. Is it right? The tax on gain. Okay, tax on gain. We used to write deferred tax. Is it right? Deferred tax on gain. 15,000 times 0.25. It comes to 3,750. 11,250. Just go through it slowly, just go through it. First note 1, then note 2, note 3. Note 1, what we have done in note 1, we have calculated the first we have taken the tax difference, then we have removed the opening balance. Is right? We have removed the opening balance. Whatever the amount we have got it, that has been identified as the increase in deferred tax. Okay. Second one, what we have done, is it right? Second, we have taken the income tax. How much they have made the provision? Estimate 19,400. Okay, income tax payable. It is a current liability. Okay. Now, how much you have during 4,000 in this 4,500? Is it right? This is what we have done. Is it right? In this 4,500, we have divided. Is it right? What is income tax? Is it right? What is income tax and what is capital gain tax? Is it right? What is the income tax and what is capital gain tax? Income tax is how much? Income tax is only 400. Capital gain tax is how much? 3,750. Is it? Capital gain tax is how much? 3,750. That is the second. Now, subsequently, the things are very good. In the statement of change, see, that is the reason. We have to show income tax separately. We have to show capital gain tax separately. Anytime, this is very important. Okay? Never ever we have to club both the things as such. Is it clear? Take your time. Don't say yes. Any doubt is there, any small doubt is there, you just ask me, okay? Any doubt, unless until, if even sometimes it will happen, maybe if the moment you ask me, I will give you further, as I told you here, is it right? What 4,150, you have to divide it. What is the income tax and what is the capital gain tax? Slowly we are moving to the big problems, okay? Slowly the shift is there. Now you almost, we have started problems with section C, okay? Next, they have given you the balance sheet, is it right? They gave you the revenue, purchases, all those things they have given. Fine. Now what they have said, there is a, see, now you have this one, land cost 5,000, there is a revaluation of 11,000. Ignore deferred tax. They are saying that you ignore deferred tax, means we should not take that into consideration. The balance of income tax account represents an over provision. Is it right? Over provision with respect to previous year. The income tax for the current year is how much? 3,000. The deferred tax is how much? 8,600. Closing inventory is how much? 16,000. Cost at the year included in the amount of inventory is 8,000, but during the inventory count this has been damaged and the selling price was reduced. The goods are now believed to have a selling price of 4,500 and there is a rectification cost is how much? 500. Means this has to be done where? This has to be done in the adjustments to whom? To cost of sales as such. Is it right? We have to do adjustments for what? Cost of sales. Is it right? How much the included in this amount is inventory that cost 8,000, but during the inventory count it was identified that these goods have become damaged. Is it right? These goods have become damaged. Means we have to calculate what is the inventory. Is it right? We have to calculate what is the closing inventory. Fine. We have to calculate what is the closing inventory as such. Is it right? And they have a selling price of how much? They have selling price of 4,500. And there is a incurring rectification cost is how much? 5,000. If you take that into consideration, if you take this into consideration, what we have to write? Where is that? Yes. Is that 4,500 is the selling cost. The rectification cost is 500. The actual value will be how much? The actual value will be 4,000. Fine. The actual value will be 4,000. Means what we have to take the adjustments for how much? 8,000. Closing inventory is 16,000. Is it right? Closing inventory is 16,000. We have to reduce 8,000. Is that how much we are going to recover? We are recovering how much? 4,000. Is it right? That first we have to calculate for closing inventory. Fine. Other closing inventory, then you have the cost of sales. Is it right? Then you have the cost of sales, then you have the income tax that is going to be represented, and subsequently there is a revaluation. Okay, how many workings we have to do? First think on that. Okay, how many workings we have to do? One working on the closing inventory, one working on the cost of sales, one working on the deferred tax. Is it right? And one working is on the inventory. Is it sorry? One working will be on the revaluation of the land. Okay, one working is on the and subsequently we have to do working on the on the income tax. Fine. Understand? Again, I am saying the first working will be on the closing inventory. Okay, write down there. I will do the first working will be on the closing inventory. Then you have to do what? Cost of sales. Then you have to do something related to the income tax. Is it right? How much you are going to pay income tax. Then we have to do related to what? Revaluation of the land. Okay, revaluation of the land. That's all. Is it right? 10% loan fine. Interest fine. Is it right? Ordinary shares, share premium. Ordinary shares, share premium. Is it right? Loan interest and retained earnings. Is that loan interest and retained earnings? Fine. Good. Is it? We will start from here. Just very slowly. Okay. Is it? First you will take note 1. Okay, note 1. First what we'll do? We'll do the closing inventory. How much is the closing inventory? How much is the closing inventory? They have mentioned closing inventory is valued at how much? 16,000. Is it right? Closing inventory is how much? Closing inventory, closing balance. Is it? Closing balance. Is it right? Information 4. Is it right? How much is there? 16,000. Fine. Next. What is there? Included in the amount is inventory that cost 8,000, but during the inventory count it is identified that these goods have been damaged. Fine. Is it right? Less damaged goods. Is it right? Less damaged goods. How much is the damaged goods? 8,000. Fine. Next. They have sold the damaged goods. Is it right? They have sold the damaged goods. 4,500 minus 500. Is it right? They have sold the damage. See how much is there? It is how much? It is 8,000. Fine. This is 8,000. Next. What we have to do? We have to add. Is it right? We have to add sale proceeds. Okay. Sale proceeds of damaged goods. Is it right? Sale proceeds of. What is the sale value? Sale value is 4,500. Cost is how much? Cost is 500. Is it right? Cost is 500. How much you will get? You will get 4,000. Is it right? You get how much? 4,000. What is the value of inventory? Is it right? This is the closing inventory. Are you clear about this? Is it? First we have taken the closing balance, then we have removed the damaged goods. We get that balance, and from the balance, whatever the value of the sale is, how much? 4,500. How much you have? What is the cost of selling? 500. It comes to how much? How much we got it? 4,000. Is it? This is the closing inventory. Fine. Next. Is it clear? Note 2. Is it right? Cost of sales. Is it right? Cost of sales. What is the cost? We have opening inventories there. Is it right? How much is the opening inventory? Opening inventory is how much? 8,000. Is it right? This is the opening inventory. Is it? How much is the opening inventory? Opening inventory is how much? Opening inventory is 8,000. Is it right? Opening inventory is 8,000. Add purchases. How much is the purchases? How much is the purchases? 20,000. Okay, 20,000 less closing inventory. How much? 12,000. 28 minus 12, it comes to how much? 28 minus 12, it comes to 6. This is the cost of sales. This is the cost of sales. Fine. Now, value, how much is there? What is the land cost is 5,000 to be revalued by how much? 11,000. How much is the value of the land? Where is they have not mentioned anything here, is it right? They have said non-current assets. Is it right? They said only non-current assets. Is it right? Non-current asset. How much is the in the non-current assets? It is the land also. Is it right? It is the land also. Is it right? It is the land. See, I don't know how it happens. This 400 now, it has to be here. 400. Okay. Fine. Okay, we'll come to that. Non-current assets, how much? Non-current assets carrying amount is note 3. Okay. Here also, there is a lot of space is there. Note 3. Okay. Is it? Note 3. Okay. What is the non-current assets? Is it right? Non-current assets. Carrying amount is how much? Carrying amount is 35,000. Is it right? Add. Is it right? Revaluation difference. Is it right? Revaluation difference. Only land. Is it right? Is it 11,000 minus 5,000? It comes to how much? 6,000. How much you have to show? 41,000. Fine. Okay. Next. What they have mentioned, is it right? Well, that fine. Is it? Income tax for the current year is estimated how much? 3,000. Estimated is nothing but the current liability. Okay. Estimated is nothing but the current liability as such. How much we have estimated? We have estimated it is how much? It is 3,000. Is it right? Is it? Estimated is nothing but current liability. Okay, all the time. Now you will not have any doubt as such. Is it right? In income tax payable. Is it right? Now, how much is that provision is increased to how much? Provision has been increased to 8,600. Is it right? 8,600. Now, they have mentioned here, see the thing, this is the opening balance, is it right? This is the opening balance. How much is the opening balance? Opening balance is 8,000. Deferred tax, is it right? Deferred tax, opening balance is how much? 8,000. Is it right? Now, how much? Last year balance is 8,000. Is it right? This year estimation is how much? 8,600. Is it right? This year estimation is how much? 8,600. Is it right? How much they have made? They have made some over provision. Is it right? The balance in the income tax account represents an over provision of tax for how much? How much is the over provision? How much is the over provision? Where is that? income tax. Is it right? See the things. Income tax. It is the over provision. Over provision is how much? 500. Okay. Over provision is, means what we have to do over provision? We have to add or we have to deduct?
Deduct.
Deduct. Okay. Over provision is what? We have to deduct as such. Is it? I have not opened my camera. I have to open my camera. Then class will be little bit interesting. Is it right? Deduct. Is it right? Over provision. Whatever is there, it is the over provision. Is how much? 500. Slowly, very slowly. Okay. Very slowly. Note 4. Okay. Note 4 as such. Now, how much we have to? What is the trial balance? What is the current year estimate? Current year estimate is what? Current year estimate. Is it right? Current year estimate is how much? Current year estimate is 3,000. Okay? Current year estimate is 3,000. Now, how much is the deferred tax? Increase in deferred tax. Is it right? Increase in deferred tax. Is it? How much they are given in trial balance? They are given in the trial balance is how much? For 1 minute. We have to take this like this. Is it right? Increase in deferred tax is how much? Point number 3. Okay. Point number 3. How much? 8,600. Fine. Trial balance. How much they have given in the trial balance? Deferred tax 8,000. Already they have 8,000 is the balance. Now they have increased to how much? Increased to 8,600. Means how much we have to increase? We have to increase how much? 600. Okay. Additionally. Is it right? This is the additional. In difference. Now there is a point number 2. Okay. Point number 2. Okay. Point number 2 is what? There is a over provision. Okay. There is a over provision. This over provision has to be less. Is that how much is the over provision? Refer trial balance. Is it right? Income tax. Is it right? Income tax. How much is the over provision? Over provision is how much? 500. 3,600 minus 500. It comes to how much? 3,100. This is nothing but income tax expense. Is it right? Income tax expense. What notes we have done? Notes are very important. If you are doing to understand the concept, we have to be very clear in the working notes. First we have done inventory, then we have done cost of sales, then we have done non-current assets, then we have taken what? We have taken into consideration the income tax expense. Is that we have taken into consideration what? Income tax expense as such. Fine. Now, okay, that's all. Nothing is there. Is it right? Nothing is there. Nothing is there. Purchases. Is that sales, revenue, purchases, distribution, administration, loan interest paid 400. Is it right? Non-current assets, income tax, deferred tax, interim dividend, receivables, payables. opening inventory, cash equivalents, ordinary shares, ordinary shares. See, now this is very important. Is it right? They will test you this. They will test you this. What they have said, see, it is right. I will write here. I will write note 4. Is it right? Note 5. Is that they always test you this. Nobody will say you that it is you have to do. Okay? Nobody will say, and students will lose marks here only. Is it right? What is there? It is right. Calculation of accrued interest on loan. Nobody will tell you this. I think we have done in one of the previous examples somewhere. I don't remember exactly, but we have done. Is it right? We have a 10% loan notes. Is it right? 10% loan notes. Is that we have to calculate interest on that. How much is the interest? Is it right? 10%. How much is the amount? Amount is 8,000 into 0.10. It comes to how much? 800. How much they have paid interest? They have paid interest paid is how much? Interest paid in the trial balance. Is it right? They are given in the trial balance. How much is the interest paid? Interest paid is 400. Is it right? Now 400 is outstanding. Is it right? Interest outstanding. This interest outstanding will be identified it as a current liability. Is it right? This adjustment they will never mention in financial reporting, and in one of the questions this adjustment will be there. Will be there. Without this, you check all the question papers, you will not have anything which is not being mentioned without this. Okay, now is it clear? Means what are the things we have to take? We have to take into consideration. We have already taken closing inventory, cost of sales, non-current assets, income tax, and accrued expenses on the loan. Fine. Now it's very simple. It's very, very specific. Is it right? What we have to do? Step 5. Is it right? No, note 1, 2, 3, 4, 5. We'll put it as note 6. Is it right? We'll put it as a note 6. Is it right? Statement of profit and loss account. Is it right? Profit and loss account for the year ending. Is it right? For the year ending how much? 31st December 2001. Now slowly and steadily you will get the you are going. This is what it says. Slowly and steadily we are talking about what we are preparing the financial statements. Okay, particulars amount. Is it right? You are writing now?
Yes.
Good. Is it right? Good. How much is the revenue? Revenue is 50,000. Is it right? How much is the revenue? Revenue is 50,000. Fine. Now less cost of sales. Is it right? How much we have calculated cost of sales? Cost of sales is how much? 16,000. Note 2. Is it right? Cost of sales is how much? Note 2. How much? 16,000. Is it right? It comes to how much? 34,000. This is nothing but gross profit. Is it right? This is nothing but gross profit. What other things are there? You have we have taken purchases will not come. Distribution 10,400, administration 1,550. Is it right? Distribution is how much? Distribution Distribution cost is how much? Distribution cost is 10,400 and administrative expenses 15,550. Is it right? 15,550. Administration expenses are how much? 15,550. Is it right? Is it right? That's all we have to take. Is it right? Next. This is over. Is it right? This is over. This is over. This is over. This is over. Is it right? Next. Anything else? 1 minute. Fine. Is it right? What will happen? How much you will get? This is profit.
8,050.
How much?
8,050.
8,050. This is nothing but profit before interest and tax. Is it right? Profit before minus interest. Is it how much? How much is the interest? Is it right? See, interest is how much? 400. Is it right? Paid. Is it right? Paid how much? 400. Payable is how much? Payable is how much? 400. Is it right? 800. Is it right? How much you will get? 7,250. Check my. Is it right? This is how. This is profit before tax. Is it right? How much is the profit before tax? 7,250. What is the income tax expense we have calculated? 3,100. Is it right? Note 4. Note 4. Less income tax expenses. Is it right? Note 4. How much income tax expenses we have calculated? 3,100. 157 minus 3, 4,150. Fine. Is it right? This is what? This is it right? This is called as a profit for the year. Is it right? Now see, now what we have to do? We have to show it other comprehensive income. Okay, other comprehensive income. How much is the other comprehensive income? Revaluation gain. There is no tax on that. Is it right? There is no tax on that. Revaluation gain on what? Land. Is it right? How much is there? 6,000. Is it right? 6,000. Is it right? How much is there? 6,000. Which note it is there? Tell me note number 3. Okay, note number 3. Is it right? This is note 3. Fine. This is other comprehensive income. How much? 10,150. Is it right? 10,000. First we have to understand the theory, then we have to do what we are doing here. The only purpose is we are showing anything in a separate category. Fine. Okay. Now, is it right? It is note 6. Is it right? Note 6. Statement of financial position. Is it right? As on 31st December 2001. Okay. Particulars. Is it right? Amount and amount. Is it right? First we have to start with what? We have to start with non-current liability, non-current assets. Is it right? Non-current assets. You have property, plant and equipment. Is it right? Is it right? Property, plant and equipment. How much is the property, plant and equipment? Property, plant and equipment is how much? 35,000. Is it right? 35 plus 6. Is it right? 35 plus 6. How much? 41,000. Fine. Next, you have current assets. Is it right? You have current assets. We don't have anything else. Is that 1 minute? We will go like this. Is that we have done with loan interest. We have to do another 50. Is it right? We'll do that. We have non-current assets. We have done with income tax provision. Little bit we have done with deferred tax. Okay. We in interim dividend paid, cash, ordinary shares, current assets. Is it right? Current assets will be what? There is a cash. Is it right? Inventory is the closing inventory. How much is the closing inventory? 12,000. Is it right? Closing inventory note 1. Is it right? Is it right? Closing inventory. Closing inventory. How much? Closing inventory note 1. Is it right? Closing inventory note 1 is how much? 12,000. Is it right? Closing inventory is how much? 12,000. Next, what is there? What is there? You have trade receivables, 10,000. Is it right? 10,450. Is it right? You have trade receivables, you have cash. Is it right? You have trade receivables. Is it right? We have trade receivables. How much trade receivables? 10,450. You have the cash. Is that cash and cash equivalents? Is it how much is the cash and cash equivalents? Cash and cash equivalents 8,100. Is it right? 8,100. Fine. If you add these things, how much you'll get? 0, 5, 4 plus 1, 5. Check my 8, 10, 11, 1, 2, 3, 4, 7. $71,550. Okay, is it? Next, is it right? Equity and liabilities. Is it right? Actually, we have to do statement of changes in equity and liabilities. We will do that. Is it? First we have to do that, then we have to do this. Is it right? First we have to do that, then we have to do this. Is it right? First we have to do that, then we have to do this. 1 minute. 1 minute. Statement. We have space in down? No, we don't have space down. Is it right? Fine, we will do here only, nothing will happen. Is it right? Statement of changes in equity. Okay, statement of changes in equity. Fine. Little bit I squeeze it. Okay, you have particulars. Is it right? You have share capital. Is it right? You have share capital. You have retained earnings. Is there? You have what are the things we have there here? Share capital, share premium, retained earnings. Is it right? Share capital, share premium, Retained earnings. Fine. Share capital, share premium. Is it right? Share premium. Is it retained earnings? Is it right? Retained earnings. Retained earnings. Then you will have the revaluation. Is it right? You have the revaluation gain or loss. Is it right? Then that is a total. Total. Just I am squeezing it. Okay. I don't have space there. Is it right? I don't have space there. Fine. First you have to take what? Opening balances. Is it right? First you have to take opening balances. How much is the share capital? Opening balance 8,000, 3,000, 3,000. Okay. How much is there? This is 8,000. This is 3,000. This is 3,000. Total will be how much? 14,000. Fine. Okay. Next, you have the current year profits. Is it right? How much is the current year profit? Is it right? You have how much? Current year profit. Current year profit. Current year profit is how much? Current year profit is 10. Is it right? How much is the current year profit? 4,150. Okay. Current year profit is how much? 4,150. Okay. Current year profit is how much? 4,150. And how much they have paid dividends? They have paid dividends. How much? They have paid 1,600. Is it right? They have paid dividends how much? Less dividends. Is it right? In dividends how much? From the profits only we are going to deduct. Is it right? Next we have revaluation gain. Is it right? We have a revaluation gain where we have to show how much is the revaluation gain? 6,000. Is it right? How much is there? 6,000. Is it right? This is 4,150. This is 1,600. This is 6,000. How much you will get? This is 8,000. This is 3,000. This is how much? 3,000, 7,150 minus 1,600. 7,150, 7,150 minus 1,600. How much? 5,550. Okay, this is 6,000. Is it right? 14,000 plus 4,150 plus minus 1,600. 22,550. Okay, this you have to do. Fine. Now if you put that one into consideration, how much is the share capital? Share capital is how much? Just you take down those values. Is it? Share capital is how much? See, you put dash here. Is it right? Share capital is how much? 8,000. Share premium is how much? Share premium is how much? Is it right? 3,000. Fine. And you have retained earnings is how much? Retained earnings is how much? Retained earnings are 5,550. Is it right? Revaluation is how much? Revaluation surplus. Is it right? How much? Revaluation surplus? 6,000. Fine. What is the total you will get? 0, 5, 5, 8, 3, 8, 3, 11, 5, 16, 16, 22. Is it right? Put it as a. Okay. This is nothing but shareholders funds. Then next, non-current liabilities. Is that? Next, non-current. Non-current liabilities. What is there? We have loan. Is it right? 10% loan. 8,000 we have calculated. Is it right? How much is the loan? 8,000. Is it right? Next, we have deferred taxation. How much is the deferred taxation? See the thing. What is the opening balance of deferred taxation? 8,000. Is it right? What is the opening balance of deferred taxation? 8. What is the closing balance of deferred taxation? Deferred taxation provision is how much? Deferred taxation provision is how much? 8,600. Okay, 8,600. Deferred taxation provision. Deferred taxation provision. Which point they have given? It is 0.3. Is it right? 0.3. How much? 8,600. It comes to how much? 16,600. This is non-current liabilities. Put B. Okay, put B. Next, you have current liabilities. Is it right? What are the current liabilities is there? You have trade payables. How much is the trade payables? How much is the trade payables? Trade payables are how much? 29,000. Is it right? This is the trade payables. Fine. How much is there? This is the trade payables. Is it right? How much is that? 29,000. Is it? Trade payables are how much? Trade payables are 29,000. Fine. Next, you have interest outstanding. Is it right? Interest outstanding. Is it right? Note 5. Is it right? Note 5. How much is the interest outstanding? 400. Is it right? Then you have income tax. Is it right? Income tax payable. Is it right? Is it right? You have the provision. Is it right? Estimates. How much is the estimates? 3,000. Add how much you'll get? 29, 30, 32, 400.
49,000.
How much?
I calculate with non-current liability and current liability 49,000.
No problem. Nothing will happen. Is it? Total equity and liabilities. A plus B plus C. How much?
$71,550.
Slowly you do. The moment you are doing this, advantage is in the examination we are going, maybe in here, maybe in consolidation, maybe somewhere we are going to do the balance sheet. Is that? Slowly we are getting an idea about how we are going to work out with the balance sheet as such. Okay. Again, a simple way, I will just repeat once again, okay? It will take time, I know, but I will repeat it, okay? First, what you have to do, first you have to see the adjustments, okay? First, you have to read the adjustments. Examination also, read the adjustments, okay? Land is there, over provision is there. Over provision means minus, under provision is plus, as simple as that. Is that right? Then you have they gave you the this one, is it right? One, they have given the current estimates is the current liability, and they are talking in terms of the deferred revenue expenditure is the non-current liability. Is that deferred revenue expenditure is the non-current liability. Then they gave you some adjustment with respect to closing inventory, all those things. Is that the moment you say closing inventory, first you means you have to do adjustments. We have started with closing inventory, then we have done with cost of sales, then non-current asset, there is no tax on that, is it right? We don't have any tax on non-current assets. Then we have calculated how much is the income tax expenses, is it right? Income tax expenses. Then subsequently we have done statement of profit and loss account and balance sheet. Is not, once you have done, workings are very important, is it right? Then you have to take, they have not mentioned this. This is very important, Shifa. Very important. Okay. You have to be extra cautious in examination. Is that you should not say that after examination, oh, I have not done that. No, I will read. And you see the thing. The moment we are doing more questions, definitely this point will be there all through the time. Okay. You have to take into account some information they will never give. You have to trace it out. We have to dig it out, and then we have to mention it. Okay?
Okay.
They gave this one. We will do this, okay? We will do this and we will stop, okay? We will do this and we will stop. On Thursday, we will do revision for revenue 7, 8, 9, okay? 7, 8, 9, yes. We will do revision for 7, 8, 9, okay? And on Friday, we will start earning per share, okay? Earning per share, fine. We will start earning per share, inshallah. And this one, this, yes, inshallah done. Okay, almost we are on the point of completion, inshallah, inshallah. Okay. Now what it says, that is it right? What it says, the directors had the building valued 24 million by an independent surveyor. Director wished to incorporate this value in the financial statements. The building was originally purchased 4 years ago and is depreciated original life of how many years? 20 years. Okay. How many years? 20 years. Which has not changed as a result of revaluation. Visor does not make a transfer to retained earnings with respect to the amortization. Is that the revaluation gain will create it, means on the gain you have a deferred tax. Is it right? On the gain you have a deferred tax. Plant and machinery equipment is being depreciated 20%. Reducing balance method, and it has going to be charged with cost of sales. Means what you have to do, we have to calculate, we have to do this. Is it right? In one of the note. Is it right? Note we have to do this. This is also we have to do a note. Okay. A provision for income tax has been ended. For the year ended is 12 million is required. Is it right? And the tax base of net assets is how much? 7 million less than the carrying amount. This excludes the gain on revaluation of the building. Is it right? Means the tax base for the net assets. Is it right? 7 million less than, okay, 7 million less than the carrying amount. Means we have done over provision. Is it right? We have done what? We have done over provision. That's good. Nothing is inshallah. Okay. Next, what is the rate of income tax? Rate of income tax is 30%. Okay. Rate of income tax is how much? 30% as such. How much is the plant and equipment? 20%. Is it? Plant and equipment is 20%. Depreciation. Is it right? Plant and equipment is 22,250. Is it right? Plant and equipment is how much? 22,250. 22,250. Accumulated depreciation 7,250. Is it right? Accumulated depreciation is how much? 7,250. What is the rate of interest? Depreciation 20%. Is it right? How much is the taxes they have mentioned? Anything they have mentioned? They mentioned current tax. They mentioned how much current tax is how much? Current tax is 500. Is it right? Current tax is how much? 500. Deferred tax is how much? 1,350. How much they have estimated? Estimated how much? Inventory, receivables, deferred tax, current tax. Is it a loan, interest, cost of sales? Fine. The depreciation is 24, 4 years life, of 16 years. Nothing has changed. Plant and equipment is 20%, reducing balance method. The income tax provision is how much? 12 million. Okay. The provision is how much? 12 million. 12 million is the provision, and there is a is it right? Is it right? 12 million is the provision. Provision is 12 million, and here they have given anything. Current year tax is how much? 500. Deferred tax is how much? 1,350. Fine. First we will do with what? First we will do with the cost of sales. Is it right? First we will do with cost of sales. That's the way we can put the things in place. Okay. Fine. We have space. Okay. I am concerned about my space. As simple as that. Is it right? I am concerned about my space. Inshallah. Is it right? First we'll go with note 1. Is it right? Note 1, cost of sales. Is it right? Cost of sales given. Is it right? Cost cost of sales given trial balance TB. Okay, how much is the cost of sales? 1000. Is it fine? Next, in the cost of sales, what we have to do? We have to take that they are talking in terms of what? They are talking in terms of they are talking in terms of what? Where is the related to? Yes, they are talking in terms of what? The depreciation. Is it right? They are talking in terms of what? Depreciation. Fine. Now, yeah, they are talking in terms of what? They are talking in terms of depreciation. $24,000. Is it 24,000 is the value? 4 years they have 24,000 is the value. In order to have cost of sales, we have to first calculate depreciation. Okay, first we have to calculate depreciation. Depreciation is how much? Depreciation, see the things. Is that just I'm writing? Okay, after that if it is required, is that cost is how much? Cost is 24 million. Okay, cost is 24 million. Fine. Next, the revalued cost. Is it revalued cost is how much? Revalued cost. Is it revalued cost is how much? Life is how much? Life is 16 years. Is it right? Depreciation will be 24 divided by 16. Is it right? Depreciation will be 24 divided by 16. 16 1 16 16 1,500. Is it right? 1,500 as such. Okay. Now, good. 1 minute. Is it right? What is the land value? Is there 25? Buildings is how much? 25,000. Building is 25,000. Accumulated depreciation is how much? 20,000. Fine. Building is how much? 25,000. Accumulated depreciation is how much? 20,000. Plant is how much? The land value is how much? 24,000. Fine. Okay. 1 minute. Class note 3. Okay. 1 minute. Oof. Fine. Okay. 1 minute. Is it right? 1 minute. 1 minute. Just give me 1 second. Is it right? Note 2. Okay. Note 2. How much is the carrying amount? Carrying amount of buildings. Is it right? Carrying amount of buildings is how much? 25,000 minus accumulated depreciation. Is it right? Accumulated depreciation is how much? 5,000. 20,000. Is it right? 20,000. This is the buildings. Is it right? Now they have done revaluation. Is it right? they have done revaluation. When they have done revaluation, how much they have done? 24,000. Is it right? You can put like this also, nothing will happen. Is it right? You take the difference. Is it right? You take the difference is how much? 4,000. This difference is nothing but revaluation gain. Is it right? This difference is nothing but revaluation gain. Is it right? Revaluation is how much? Revaluation is 24,000. Is it right? Revaluation is how much? 24,000. Fine. Next. Is it right? Next. Depreciation is how much? We are doing separately. Is it right? Revalued cost is how much? Revalued cost is 24 million. Fine. Revalue cost is for 24 million. Life is how much? Remaining life. Life remaining is how much? 16 years. Depreciation per annum is how much? 24 divided by 16 years, 1,500 million. Is it right? You remove this. Is it? You remove this. Okay? You don't need. Now we got what? We got depreciation. How much we got depreciation? We got depreciation of 1,500. Is it right? We got depreciation of how much? 1,500. This depreciation we take in the cost of sales. Is it right? This depreciation we take in the cost of sales. Next, they are saying this is depreciation on what? This is depreciation on buildings. Is it right? This is depreciation on buildings. Fine. Very simple. Is it right? This is depreciation on what? Depreciation on buildings. Is it right? Next, we have to calculate depreciation on plant and machinery also. Is it right? Depreciation on plant and what is the value? Value is how much? 22,250 minus accumulated depreciation. Is that accumulated depreciation is how much? 7,250. Difference is going to be 15,000. Depreciation on reducing balance method. I think so. What they have said? Reducing balance basis. Is it? Depreciation on what? Reducing balance. Reducing balance. Is it? Reducing return down value. Reducing balance. Is it right? Reducing balance. Depreciation on reducing balance. Reducing. Allah Kareem. Depreciation on reducing balance means 15,000 in times 0.20. Is it right? 15,000, 20% now they say. How much they say? 20%. 20% means it comes to how much? It comes to 3,000. Fine. Now 1 minute. I will make. Is it? This is cost of sales, and this is also what? This is also cost of sales and balance sheet. Okay, cost of sales. Yeah, I will write other cost of sales and statement of financial position. Is it right? Cost of sales and statement of financial position. Is it right? See what maybe you have observed me. Is it right? When we are doing this, first you have to do simple things. It's like you have the thread is right. Slowly you have to unfold small calculations. Is that easy calculations? See, because in examination for every calculation there is a mark. For every calculation, it is not marked for the total, it is marked for the every step. So simple calculations we have to finish it off. Is it right? What we have done? We have done with respect to the depreciation. Is it right? We have done with respect to depreciation. This is now. If you take cost of sales, is it right? If you take cost of sales, how much is the cost of sales? Cost of sales is 130,000. Is it right? Cost of sales is 130,000. In 130,000, is it right? How much is the depreciation? How much is the depreciation? Depreciation is how much? 1,500 and 1,500 and 3,000. Is it right? Depreciation is how much? 1,500 and 3,000. Is it right? 1,500 plus 3,000. Is it right? Next. Fine. Good. Is it right? What you have to do? We have to do add. Is it right? Add depreciation on buildings. Is it right? Depreciation on buildings how much? 1,500. Add depreciation on plant and machinery how much? 3,000. Cost of sales is how much? 134,500. Is it right? Cost of sales is how much? 130. This is note 1. Is it? Cost of sales is how much? Cost of sales is 34,000. 134,500.